Hey everybody, it's Aaron Norris with the Norris Group. It is July 3rd. We are taping early because we are closed for the 4th and the 5th this week. But did you hear about the real estate technology company that is pulling out of the United States? Seems a little early, but much more when we cover the biggest headlines in real estate. Up on the radio show and podcast, we have Leslie James with AirDNA. AirDNA was awesome enough to help us with a chapter we created on vacation rentals. They wrote a small portion of a very big chapter on vacation rentals that we did last September. And then again, they helped us build our Florida book, doing research for real estate investors who are 1031 exchanging with us into Florida. It was an amazing help to have all the data, and it's just awesome. They finally were able to go on the radio show. So we cover all the different features that they have, all the different data sets, and how to use a program. So if you're on social media like Facebook, LinkedIn, and YouTube, you'll get to see some pictures. If you're just listening on the radio show, you'll have to try to guess what we're looking at, but I just really appreciate AirDNA participating and for all the data. Spending on construction decreased by 0.8% in May, the first time in 6 months to see a decrease. Home prices increased 3.6% year over year in May, according to CoreLogic. The supply of housing for sale was down 0.3% in June, the first annual decline in 10 months. And the Mortgage Bankers Association reported a slight 0.1% decrease in mortgage applications from last week. Taxed to the hilt, more home buyers are migrating to Florida, says the Associated Press. The uptick in migration started with the federal tax overhaul in 2017. The inability to deduct state, city, and property tax from their federal returns in places like New York, New Jersey, and Connecticut has really probably caused a lot of those problems. It's all to the advantage of Florida's economy and its real estate industry, brokers and developers say. According to them, they are seeing not just people move, but they're also relocating their businesses. Realtor Magazine's message to agents: you can't ignore iBuyers, and I definitely agree. I think they are here to stay, or at least some of them. The idea is that homeowners can go to iBuyers to get an instant offer on their home. You know, what real estate investors offer: fast sale, all cash, flexibility on the closing date, all those kind of features that we do. Well, they're just doing it at mass, and they're spending a lot of money, and some of them have raised billions of dollars to accomplish this. Now, they all have different buy boxes. That's the term that they like to use. And I'm going to talk a little bit more about that on a radio show next week as I cover some of the things I learned in Austin, and then some research that we're talking about for our upcoming newsletter, because the buy box is really big in some markets here in California, and it's really hard to make sense of it all. Leading the way is Opendoor. They have raised more than 10 times the capital than OfferPad, but Zillow and Keller Williams are hot and heavy, have a lot of money that they are pushing into the market. So I think this year is going to be the year of something pretty crazy. As they compete with each other, I can't wait to watch. HousingWire reports there has been a rise in alt-doc loans in the past 2 years. According to a newly released report from Fitch, the volume of loans in the alternative documentation space has doubled in the last 2 years. But let's be honest, it was really, really low, so maybe it's not overwhelming like it was last time. Fitch says that these types of loans appeal to borrowers who may be seeking a streamlined loan closing process and to borrowers who are unable to qualify for a loan using traditional underwriting. That's the key term right there. Is it as bad as it used to be? Doubtful, because even Alt-A loans you have to qualify to prepay for most of these, so it doesn't seem like it's getting out of control. I see crazy teaser rates, but maybe you have a better idea. I just haven't seen really crazy loan programs yet. 10,000 baby boomers are retiring every day. Looking at cities over 100,000 in population, MarketWatch shows that 85266, that zip code, which is Scottsdale, Arizona, is the #1 location. Scottsdale offers many social and medical assistance facilities. It's got top-rated hospitals, restaurants, and spas, as well as many outdoor activities. The personal finance site Smart Assets reveals that per capita, Scottsdale is home to one of the highest concentrations of golf courses of any city in the United States. So apparently there's a blueprint, and Scottsdale is winning at life. Purplebricks is leaving the United States market after shares tanked 75% in 2 years amid a deteriorating market at home, which is in the UK, and its expansion abroad deepened losses, and its operating budget more than doubled in that same period. Purplebricks charges homeowners a fixed fee whether or not a property is sold. The news comes on the heels of the company's Australia exit in May. Purplebricks said a significant opportunity to disrupt the U.S. market remains, but it would take substantially more management time and resources than the company is able to commit at this time. What's really interesting about this is that, they changed their model and charged a little bit more here in California, and they were based out of Irvine out here, and In this market where a lot of people don't see the value in a listing agent because the market is a seller's market, you list it, and if it's in decent condition, it's going to sell. This was a much cheaper way to sell in this market, and it's fascinating that they are leaving now. In a market that's still really strong and good, you would think their model would work. So man, this is way earlier than I was expecting, but again, a lot of these technology companies have not been recession tested. I'm just surprised to see it this early. What are your thoughts? If you're on YouTube, please leave a comment below and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video. And if we missed something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. We would love to see you out and about. July 8th, you'll catch me at Innovative Real Estate Marketing with LA South REIA. I'll be talking about iBuyers and how we need to position ourselves as real estate investors. I'll be doing that same talk a couple days later, July 10th at Sacramento at NorCal REIA. July 13th, Bruce and I will both be at the Think Realty Irvine Conference and Expo. They did a great job last year in Irvine, and we are back doing different panels and chats. August 21st, 10 decisions to make before the next downturn with Invest Club, and August 23rd, Innovative Real Estate Marketing with REREP. So you can find out all those events on the training tab on our website. For more information on hard money lending, including fix and flip, buy and hold, new construction, and now our new accessory dwelling unit program. It's a second program and pretty cool for those landlords that have a lot of equity. You can check out the hard money tab on thenorrisgroup.com. For more information on trust deeds, mortgages, and notes, hit that invest tab on thenorrisgroup.com. With that, have a fantastic weekend, and we'll see you next week.